now I want to talk about the long-term U.S. economic outlook. Now we're going to go way further ahead into the future. And I'm going to start with a longer-term version of that first chart we started with. Take a look at this. This goes, much further back and much further forward. And this is the brutal reality. We are entering this decade-long super trough of working age population growth. This is the 2020s. And you can see here that for the rest of our lives, probably, we are never going to kind of see the working age population growth that we experienced as recently as 2007 or 2010, 2011. We're never going to see that again as far as the census can tell. And believe me, this stuff is kind of written in stone. Your fertility, even a big change, isn't going to make a difference for the next 25, 30 years, at least a significant difference. Immigration is not going to change that much. So this is kind of what you're looking at, right? And I say that because, again, I come back to this point. People want to bring back the Reagan economy. But take a look at that chart again. Back in the early 1980s, you were up at, 1.7, 1.8% per year growth in the working age population, and we're headed down to about a low point of about 0.1. Well, that's a huge wind at your back. That's 1.7% per year free GDP growth just from more warm bodies, okay? And that's the reality we're looking at. So that's the first thing I want to say. Now, in this next two charts, a lot of people say, yeah, Neil, you're right, but you forget one thing. A lot of these boomers are working more than seniors used to work. We're seeing a revival in labor force participation among older people, and it's absolutely true. Take a look at chart 18. You're seeing labor force participation by age definitely going up. A lot of these boomers, work centrality is a major role in their life, certainly more important than it was for their parents, probably more for their kids too. Anyway, a lot of these boomers are working. And a lot of them have to work because they didn't have the income, they don't have the assets that they once planned. And you can say they're working more. Nonetheless, you can see how much these rates are going, how much of an impact that has as they move beyond age 65. And more importantly, this big boomer bulge is moving from their late 60s on into their 70s. And this is the next point I want to make. As we move into the 2020s, the boomer bulge, which early on, right, namely today, hugely increased the share of seniors who were under age 75, throughout the 2020s and 2030s is going to be hugely increasing the share of boomers over age 75. Do you see this? See particularly that chart on the right. That means that we are going to be lucky if the entire 65 plus employment rate does not decline, okay? Even though these boomers at any given age are working more, so many more of them are going to be over age 75 as that big bulge ages, right? So we're going to see this growth of what's sometimes called the old as opposed to the young old. I kind of feel like, Don Rumsfeld and the known unknowns and the unknown unknown. Okay.
Want more Hedgeye? Subscribe to Hedgeye Risk Manager, the holy grail of risk management investing tools. This deluxe suite of investing products includes ETF Pro, Investing Ideas, Market Edges, The Macro Show, Early Look, Risk Ranges, Real-Time Alerts, Plus, Macro Select, and our quarterly investment outlook. Try Hedgeye Risk Manager today. Now for the low price of $24.99 a year.